We now have Mahantesh Sabarad, independent market expert, joining us on the show to give us a sense of the moves that we have seen, along with Kunal and Nuresh, of course. Mahantesh, I'm going to come to you. Let's talk about the market move we've seen today. Slight bit of a subduedness in the middle part of the session, but we're back to almost the day's highest trading point for Nifty. Yet another record high also coming in for Nifty. Do you think this exuberance we're seeing in Nifty is sustainable going ahead, given that the budget is just round the corner?
There are multiple reasons why the markets are actually upbeat. It's not just today's session. If you look at the past several months, the upbeat market is trying to gauge into the future, wherein we have the likely monsoon outcome going to be positive. We're going to have inflation coming down, and therefore RBI looking for rate cuts later down in the year, probably post October. We will have a large surge in money coming in into India, foreign money coming into India, primarily through the equity route and now increasingly through the bond route as well. And we have now an interim budget upcoming, which could lay the foundation for further growth momentum to pick up. So the markets have been buoyant for all these reasons, and we also likely going to see a lot of corporate profitability surging ahead because there has been a general demand recovery post the lull we have seen the last 3-4 years, particularly on the consumer side, both durables as well as fast moving goods. So that being the case, good corporate profitability does indicate better market outlook ahead. And that's what we are seeing in terms of the market reaching new highs.
Absolutely, Mantesh. What interesting is also shaping up is just in terms of when you look at the jewelry retailers. We did have the Q1 updates that came in the last couple of days, and Titan, Kalyan as well as Senco. Now, Senco, Kalyan managed to see good growth, and in the last couple of quarters, Mantesh, what we are seeing is that Titan is been underperforming in terms of the growth that one has seen versus a Kalyan and a Senco. Obviously, Senco is a lower base that they have, so higher growth is what they're seeing. But do you think there is a play that could come in where we would see a Kalyan and a Senco actually perform better? What's your word coming in for Titan, Kalyan as well as Senco when you're looking at in terms of
So,
the
so
jewelry?
it's quite Titan is a separate company to be looked at apart from the rest. So you cannot compare a Titan with a Kalyan Jewelers or even with a Senco. Having said that, the general jewelry industry has been growing on the back of better income growth that we are seeing, particularly now, better farm income growth anticipated ahead. Not only that, some of these companies have their own, unique plans. Some of them are expanding even abroad with good store growths that are happening. Titan is not into that league in terms of high growth on the showroom side, but they are trying to expand their offerings beyond jewelry now and trying to de-risk the business. So with these different strategies in play by each of these companies, you cannot equate them together and call that the industry is likely shaping up such that there is a market share gain for somebody and market share loss for somebody else. That quite frankly is not the case. Like I said, the income growths or better income growths ahead are likely to fuel growth in jewelry sales, but more importantly, specific strategy growth of each companies would determine the path ahead for each of them.
Right, before we take a look at these jewelry players on the charts, I just quickly want to mark Sensex has also reached a new record high as of now. 80,366 is where the Sensex at, 0.5% higher for the Sensex and led by gains in Maruti Suzuki, M&M, ITC, Sun Pharma and Titan, all of them aiding Sensex to record fresh levels. But let's focus back and talk about the jewelry players. And Kunal, I'm going to come to you. Give us a sense of what these players are looking like on the charts to you. We got a fundamental take. Give us a technical take on what Titan as well as Senco look like on the charts to you, as well as Kalyan Jewelers.
So I think all three of them are different in terms of the charts. For example, Titan is trading below its long-term averages. The charts are very weak. I think just about last week or so, the last few days, the stock had seen a sharp sell-off, as well as a continuation sell-off below its 200 moving average. So it means that the stock would probably get into a further downtrend. And in these kind of scenarios, whenever there is a price rally into the stock, it ideally gets sold into, because the medium to longer term structure for these stocks generally becomes weak. So what we may probably have to look out for is that maybe this rally where the stock is moving up higher, if the dynamics of the rally doesn't change, which means that the volumes don't increase up higher, and it's the same nature of price trend the stock follows, then we could be looking at the stock falling further from current levels also. And Senco, on the other hand, I think is trading much above its long-term moving averages, and it's trading with a very strong as well as a fair degree of positive upside for itself. So I think at 1,000 odd levels, it's come back towards that 50-day moving average, making the risk reward a lot more attractive. Kalyan Jewellers, I think, is apparently one of the strongest name from the entire jewelry related pack. So I think in that sense, the stock is trading with almost a 10% to 15% higher bias or a higher level above its 50-day moving average. It's forming a bullish flag formation. The price volumes have been quite strong. So I would probably believe that Kalyan Jewellers is one of the strongest out of the three names that you mentioned. And on the upside, the stock can probably come back to that 540, 550 mark, which is a very decent high for the stock.
Absolutely, surely keeping an eye out on Kalyan Jewelers over there as well. But what's the dealing room chatter this afternoon? It seems like it's on PNC Infra, but more details on that. Sharad is joining in with us. Sharad.
Well, yes, in focus is PNC Infratech, and the dealer buzz in the street is that there's a buying coming in from domestic institution, and it's expected that a PMS is adding its position. Now, interestingly, the DIs have 26% stake in the company overall, and the key DIs already invested in the company includes the names such as Nippon Mutual Fund as well as Kotak Mutual Fund. Now, street is expecting a couple of important triggers for the stock, especially because the stock is literally debt free. So you can say that the interesting part would be the monetization of assets coming ahead, and especially the announcements are expected to happen over the next 1 to 2 months. Also, it's expected that there would be more settlement of arbitration cases with NHAI, which were actually stopped because of the elections. So now more arbitration awards also might be getting awarded from NHAI as well. And because of these both reasons, it could boost up the financials for the company as well.
All right, keep a close eye on PNC Infra on the back of that dealing room chatter that Sharad is picking up for us. Thanks, Sharad, for taking us through that. Naresh, I'm going to come to you for the technicals, and two stocks that I'm spotting that are doing phenomenally well today are from the commodity side. One is you have McLeod Russell and you also have Bombay Burma. Two stocks we don't talk about quite frequently, but both of these stocks are outperformers in the market today. What sense are you making of both of these stocks on the technicals? Are you penciling in any more upside?
So every year or so, whenever we see tea prices go up, these stocks actually make a 20-30% move and then fizzle off. So today we've seen a 20% move, whether it's a Harrison Malayalam or a Bombay Burma or a McLeod Russell. And we could see some bit of upside tomorrow, and then maybe we could top out. So time to avoid. And if somebody has bought, should be looking to book profits today, as or at least tomorrow in the morning itself. We've seen this floppy moves in this sector multiple times. So would be an avoid as of now.
Would be an avoid coming in on these, tea plays that are there. But, Mahantesh, what is interesting today also, we discussed earlier, was in terms of the auto sector, right? Maruti Suzuki today obviously running up away in trade on the back of those news flows coming in from the UP side that, obviously the tax waiver that would come in for there. So Maruti obviously is managing to hold on, but with that, auto and auto anks overall as a play has been working out, whether you look at tires or Bosch or, in the sector. What is the word for auto and auto ancillaries? Anything interesting that you're finding, and what's the view that you have?
So firstly, on the automobile side, you will notice that the sales are decelerating since January. The June month sales for passenger vehicles has been the weakest of the past 6 months in terms of absolute numbers. And the growth rate, YOY growth rate, has also been decelerating. Now we are just in to tepid single-digit kind of growth numbers for the passenger vehicle industry. But that's not really the case for two-wheelers. Two-wheelers are doing better. They are growing closer to just above the double-digit mark, somewhere around 11-12%. And we see cyclicity hitting the commercial vehicle side quite badly this time around. So all in all, there's nothing much to look forward to except for the two-wheeler space, like I mentioned, in terms of growth. Now you talked about ancillaries. Now in ancillaries, yes, the replacement demand is something that really helps. A lot of ancillary products, particularly tires, particularly batteries that you talked about. And you will also have other ancillary space, be it bearings, be it some of the wear and tear items related to the axle, etc., doing relatively better. Having said that, the forecast ahead seems that the sales for automobiles may not pick up very fast, and the only buzz that we have, and which is what we saw today, was the incentives being offered for electric or hybrid vehicles, and the possibility of some kind of GST reduction ahead. Now, the GST reduction will have to be a collective decision taken by all states and the center put together, but there's enough pressure building up for the GSTs to be moderated, at least for some parts of the automobile market, if not the entire industry per se. Having said that, the outlook only in the case of these events, which is a reduction in the GST and any further incentive offers from other states, can give a leg up to the automobile companies. Today's move in certain stocks is something which I find is unsustainable. And I must point out there is also another move which is likely to hit some of the automobile companies badly, and even auto ancillaries, is that the government is looking at the royalty norms once again, and I suspect that MNC companies will not be able to extract too much royalties of their local units.
Point taken. Let's keep it going about auto anks. And Kunal, I'm going to come to you. Now, we've seen quite the run up when you talk about stocks like Amara Raja in the previous month. You have Exide that has done well. Give us a sense of how these stocks are looking on the technicals from the auto anks pack, the likes of you have Apollo Tires, you have Samil. Take us through what you're spotting on the charts for all of these stocks.
See, I think this is a very interesting pocket, Snehi, because there are many stocks over here which are looking very strong. So for example, the battery names, Exide, Amaraja, we've seen what these stocks have done over the last, 6 months, 6 months broadly. These stocks have done exceptionally well. So I think I remember being at a point where Amaraja battery was a stock which was just around the 1,000 mark pre the elections, and it's now moved towards the 1650, 1700 zone. Exide was a stock which was just languishing around the 300 levels. That stock is now moving closer to the 600 mark. It's done exceptionally well. So both the charts are looking fairly attractive, fairly positive, and I would still believe that traders who have long positions into these names should ideally hold on to the stocks. Coming to the other set of names, the likes of Samvardha Motherson Samil, that's a chart which has looked very attractive. In fact, I had been very bullish on the stock when it had started to cross that 106 to 108 levels. It's now crossed even the 200 plus mark for itself. The stock has done reasonably well over the last 1 year, and it's more of a consistent rise the stock has seen rather than those flashy uptrends which the stock typically tends to see in the previous or the historical attempts of the stock starting a rally for itself. So I think that's also another positive sign. Now from the fresh names, if there are other fresh auto anch stocks which are, I believe, heading towards a breakout. One of them is CIE India. That's a chart which is starting to look very attractive. That stock I think is trading just about at 600 plus levels. It's completed a couple of technical patterns, a bullish pennant formation on the longer term charts, swing breakout on the longer term charts, and I believe on that prospect, the stock could probably fairly do pretty well for itself for the medium to long term.
What's interesting today in the play is also, let's pull up PG Electropass. That's a stock that's been buzzing in trade today. We have seen actually a lot of these news flows, and whether you look at a Dixon Tack, Havells, all of them are buzzing. Now, what came in yesterday as a news flow was that the government has reopened application for the PLI scheme for 90 days. We managed to speak to Vikas Gupta, the MD at PG Electropass, in terms of what are their plans for the PLI scheme, which is reopening again on the 15th of July, the demand that they have, as well as the traction that one could expect for the company going forward. Listen into that today, because as of now the stock is holding on to the day's highest point.
We plan to invest again in a reopened in a new avatar of PLI also for white goods. And what we see the kind of traction that we are seeing in the AC category business for us, it makes a lot of sense for us to commit more capex and look at the larger sales volume in coming 2-3 years from the AC category. So we need to read the finer details of the policy which has been announced yesterday. So we will be formalizing our strategy, and we will be definitely investing in the new version of white goods PLI as well.
All right, PG Electroplast in focus today. Good moves coming in on that stock. Naresh, what are you spotting for this stock on the technicals? And stock has done pretty well today, 7% higher. If you could also pull up the monthly chart and see what the stock has done over the last month, I'm sure good moves have been coming in, 41% higher over the last 1 month itself. Naresh, further upside, is that something you're seeing for the stock?
So the move has been one way in the last, say, 4 months from the March lows of 1600. The stock is at 4000 now. So out here, the only way one can ride it is to keep a trailing stop loss or book in parts. At current levels, the risk reward is way off. So would not be a fresh buy here. The last swing low is 3600. That becomes a trailing stop loss for the stock. And the momentum is still strong. So we're not seeing any signs of topping out as of now. But the risk reward is not great for a fresh buy.
Right. Kunal, let's just go across and take your BTST trades for today.
So there'll be two buy calls. Vinny, the first one which I would be suggesting would be a buy ICICI Bank. Now, especially after today's up move, where the stock has shown very good traction for itself. Would look out for targets in the range of 1270. Stop loss could now be trailed higher because ICICI Bank has moved up in the last half an hour, last 1 hour. So stop loss could now be kept at 1225 approximately. And the second would be a buy on Havels. That's a chart which I believe is heading towards a very strong bullish, flag formation breakout about the 1900 levels. Buy with a target of 2000 and stop loss at 1870.
All right, you have ICICI Bank and Havels as Kunal's BTST. Naresh, what about you? What stocks have made it to your BTST trades?
So first would be a buy on Britannia close to a new all-time high, stop loss at 5630, target price of 5750. Second would be a buy on Sun Pharma, revise the stop loss out here. The momentum has been stronger. It's moved up in the last few days as well as in the last few minutes. Stop loss at 1575, target price of 1620.
Keeping an eye out on the stocks there. Those were Naresh's BTST trades. Mahantesh, I'm going to go back to that point in terms of what we were talking about, the PLI schemes that has come in for these players. So what's your word, whether you look at PG Electro, Havels, Voltas, Blue Star, all of them are buzzing in trade. They have seen that traction and pickup. Do you think these consumer durable sides or even an EMS play is something interesting that you are watching out for?
So firstly, as far as consumer durable is concerned, and particularly all these white goods are concerned, we have been seeing that the last 4-5 years, the level of imports has gradually started weakening, which means that there is a lot of localization that is happening. Aided by the PLI scheme, we will see more production happening overall in India. As an industry per se, the growth has been very tepid. I would put the white goods industry growing in terms of volumes at somewhere around 7-8% per annum kind of growth. But there is premiumization that is happening. There is obviously new products that are also coming up, making the value market actually expand quite a bit. Coupled with the fact that the domestic share of white goods domestic production share of white goods is likely to go up relative to the export or the imported kind. We will see the industry back-end players actually benefiting quite a bit, not really the front-end players. The back-end players really benefiting a lot. And if the PLI schemes do promise better incentives ahead, it should be all the more good news for many of these white goods manufacturers. But let's remember one thing, the PLI scheme is attractive so long as the interest rates that we see right now are high. The moment we see interest rates dip by about 2 percentage points further down the line, and I'm not talking about 2 to 3 years down the line, the PLI schemes will no longer appear attractive for many of the players. So it's a game where you'll have to be very efficient in terms of your production installation that is quick to capex, and and therefore quick to exit as well.
So view coming in from Mahantesh on the entire manufacturing EMS space in particular. But Naresh, I want to talk to you about one stock, and we've seen some brokerage notes coming in on this one this morning. I'm talking about Affle India. Now, Citi has initiated a buy rating with a target price of 1,600 rupees. And if you see the stock on the YTD basis, has not done much. So on the technicals, do you think, would you agree with this note and the target price? Are these levels that you are watching out as well for this stock?
So technically, the stock looks interesting because 1350 was the high back in 2022, as well as the stock topped out in the whole digitization wave in 2021. And finally, after 3 years, the stock is coming back. Till the time it sustains about 1330 levels, there is a possible upside back to 1700. So out here positive, but after the gap up, the only concern is it has not sustained really well. But at current levels, one could be looking at a little bit of a drift down, and that would be the time to buy. So closer to 1400 to 1350 is the buy zone with the stop loss below 1300.
Sure. Okay, keeping an eye out on the targets over there for Affle. Kunal, I want to talk about one of these names that have been buzzing in trade, and we've spoken about these before as well, and that is the railway stocks. And specifically, I want to know in terms of RVNL. While we've seen a run up coming in, for a very long time, today it's a bit of a correction coming in. Do you think now it's time, for this stock maybe start booking out profits or something of a downtick that one could watch out for here?
No, in fact, my belief is that if in case the stock comes closer to its say long-term moving averages, say 50 DMA for itself, which would be a fast stretch from current levels. But even if with adjusted towards time, if the stock corrects say towards the 450 to 485 kind of a zone, then I believe that it could probably tap back into a very strong support territory. Because remember, I think historically, whenever the stock has seen such kind of a price volume up move, we've typically seen the stock moving on from stage to stage, trying to up the base for itself. Initially we were looking at 200, 225 as a base for RVNL. That base got shifted up higher at the start of 2024 to almost 300 levels. And now we are looking at the stock at 540 plus mark, which means we could be looking at a fresh base, say closer to 450 odd levels for RVNL. So the closer we are towards the sub 500 levels, say 450 to 480 range, the better the risk reward is to initiate a fresh buy on the stock.
Let's move on then. Mahantesh, let's shift focus from railway. Let's talk about chemicals now. And, this is a pack that has been seeing some reversal coming in, good action being seen in some of the chemical stocks lately as well. And, with this entire China Plus One theme playing out, what are you penciling in for the chemical sector going ahead, given that we've seen some changes in raw material prices also playing out for this sector? So what's your view when it comes to this particular basket of stocks?
So chemical is a space where it is quite a high dependence on imports, quite a high dependence on landed prices of imports as well, with little domestic production really catering to the overall demand that exists in the country, except certain few chemicals. You name it, fertilizers. We import quite a bit. You take even plastic related PE, polyethylene, polypropylene kind of numbers. We still import quite a bit because our growth rate is very high, and therefore this dependence on the landed prices or overall international prices is actually a factor to be watched. What is interesting going ahead is that with the rupee remaining stable for quite a few months now, or I would say quite a few years now, the outlook on the rupee matters most for the chemical sector, while the local demand in terms of products output growth, etc., is going to remain muted. We're not going to see excessive growth unless we see a large plant coming up or a large capacity somewhere coming up in terms of capex that could really drive the chemical sector space. I would rather be watchful of the sector now. It has had its run in terms of the stock prices in the past. There's nothing much available for people to really look at ahead. Even the pharma-linked chemical spaces are looking weak.
Right, Mahantesh, thanks so much for taking us through that.
If you like this video, then like, share and subscribe to ET Now.